Good afternoon, ladies and gentlemen, and welcome to the TRACKWISE Designs PLC interim results for the 6 months ended 30th of June 2021 investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet company, and we will send you an email when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, we would be most grateful. And I'd now like to hand over, if I may, to Mark Hodgkins, CFO, and Philip Johnson, CEO from TRACKWISE Designs. Good afternoon.
Good afternoon, everybody. It's Philip here.
Good afternoon, everyone. Mark here.
So we're here to present to you the 2021 interim results of TRACKWISE Designs PLC. So just to remind you, TRACKWISE is an established UK manufacturer of products using printed circuit technology. So our vision, stated here, to be the preeminent interconnect partner of the world's leading innovators. So this is being delivered by 2 divisions on 3 manufacturing sites. So advanced PCBs. This is the foundation of our business. Advanced PCBs are being delivered by Stevenage Circuits, which we acquired in April 2020. Since acquisition, we have transferred to Stevenage the RF business, radio frequency business, previously manufactured in Tewkesbury. Improved harness technology, or IHT. This is our driver for growth. IHT is currently delivered from Tewkesbury and soon also to be from Stonehouse, and we'll describe both in more detail. Okay. And again, yeah. So improved harness. Keep going again. Next one. Improved harness technology is the manufacture of a length unlimited, multi-layer flexible printed circuits. So this is proprietary patented technology. Improved harness technology, or IHT, has been developed as a replacement for conventional wire harness, with the main benefits or improvements of reduced weight and space. Flexible circuits is a proven multi-billion-dollar global business, with application typically limited until IHT to inside a box or equipment. The innovation is patented worldwide, as indicated in here, and this patent protection, combined with the extensive body of know-how built up across the business, represents our key barrier to competitors. In reality, our principal competitor is yet no change, the incumbent technology. So by removing any size limit, IHT brings the proven benefits of replacing wire harness by flex PCBs to a very large new spectrum of new opportunities, box to box, at fuselage, at wing level for aerospace applications. So this is an industry-changing extension to a proven technology. So next slide, please. The advanced PCBs. Stevenage Circuits, which we acquired in April 2020, is a business formed nearly 50 years ago. The business manufactures a full suite of advanced PCBs to a wide customer base, a few of which are highlighted here on the right. Iron Science Limited, a UK manufacturer of gas and leak detectors and gas detection sensors, has been a customer of Stevenage Circuits for many years. Their business is growing strongly. While the advanced PCB divisions may not have the strong growth prospects of IHT, it's a very large and important part of the group, especially now in 2021. So if we go onto the operational highlights, slide 9. So there have been and continue to be well-publicised global supply chain constraints, and TRACKWISE hasn't been immune to this. But despite these and continued COVID irritations and interruptions, we believe we have continued to make good strategic progress in 2021. We have acquired and raised a mortgage on a new freehold premises at Stonehouse, Gloucestershire. We have made good progress with the capital investment programme for the new high-volume, low-mix, roll-to-roll IHT production to be implemented at Stonehouse. We have appointed and are very pleased with our appointment of a Chief Operating Officer, Steve Hudson, who came to TRACKWISE from Williams Advanced Engineering. Steve is growing a strong operational leadership team for delivery of the facility at Stonehouse. In this context, it's worth noting that the Honda Swindon closure has brought experienced automotive manufacturing professionals onto the jobs market. In the period, we've extended the manufacturing supply agreement with a UK EV OEM to 4 years and signed a multi-year agreement with Catheters Catherine to a Swedish catheter developer. So Mark can now talk you through the numbers.
Okay, so as you might expect, the results were better this year than last year at the half year, simply because, or not only because, but largely because of the inclusion of Stevenage Circuits for 6 months rather than for 3 months, and that led to a sharp increase in revenues. But independent of Stevenage Circuits, we had a large increase in IHT revenues. At the end of June 2021, the IHT revenues for the year were almost the same as the whole of last year. The gross margin has improved during the first half of this year, and that's a consequence of the improved mix between PCBs and IHT. IHT carries a much greater gross margin, and that has contributed to the increase in margins. Not surprisingly, the inclusion of Stevenage Circuits for the full 6 months has increased EBITDA and reduced the operating loss. And again, not surprisingly, given the amount of money we raised the back end of 2020, we've spent we spent a lot of that money already, and that's contributed to a reduction in the net cash, which you would expect. And we will be talking about the capital expenditure and the progress of that investment shortly. So just some notes in the comprehensive income and equity statement. I've already mentioned that IHT revenues are at record levels and that margins have improved, reflecting the mix, the change in mix between IHT and APCB. Quite a lot of exceptional costs, as you might expect, nearly all to do with the new site at Stonehouse, with a lot of unusual expenditure occurring to get that off the ground. And also, of course, adding back the share-based payments, which you can see there. Big change in our corporation tax this year. Compared to last year, the credit from R&D tax is much less, but that is being masked by the fact that the change in corporation tax rate from 19% to 25% required us to restate our deferred tax provisions at the new rate. So there has been a charge to the P&L account for deferred tax in the first half, and that masks the R&D tax credit. The R&D tax credit would have been, or still is in fact, £221,000 for the half year, and that will be claimed after the year is finished, obviously. Then moving on to the balance sheet. Clearly, we've got a very big project on at the moment, so very focused on cash management and working capital. So I wanted to explain why other debtors, or trade and other debtors, are so high. Within that number of 5.498 million are 2.6 million of deposits for capital expenditure. So that rather skews the working capital number, but in actual fact, if you take that out, it does not look so bad. And we've continued to invest in our development, IP and development costs. We've done a lot of work this year with the OEM EV company, and that will take us through to production next year, when these costs will reduce and we will get into production. On the cash flow, again, just mentioning again the other receivables. Remember that's capital expenditure deposits. We said last year when we raised the money that we would use asset finance wherever possible, and this is what we're doing. And we're currently paying well below 4% for asset finance, and we're meeting all our needs from the market. The R&D tax credit for last year has not yet been received. We expect to get that in October, and that's £544,000. Looking at the cash position, not surprisingly, cash has reduced. As already said, we're on a big capital expenditure program, but it's worth noting that we bought a property. We bought this Stonehouse property for 2.8 million, and we raised a mortgage on that of 1.96 million. So the net investment was 800,000. We have undrawn invoice discounting facilities of 0.75 million, and that is shortly to be increased to 1.25 million. We have a net asset financing facility already credit approved, but not drawn, of 1.3 million. And as I've already mentioned, we've got R&D tax credits of 544,000 coming in for in October 2021. We think the cash is under control. We're obviously managing it on a daily and weekly basis. We think we're cash funded through to production. It's not without its risks, of course. There are some risks, but we believe we've got those mitigated and we're funded through to production. Okay.
So on to the financial year 21 current trading. In other words, post the reporting, we've just reported first half revenues of a little over 4 million. July and August saw a further 1.2 million pounds of sales and a total order book of just shy of 4 million pounds, of which 2.8 million is for delivery this year. So we are confident in our order book for the second half. We've still got a bit of work to do to get the last orders in and clearly to get all the product out of the door. But that's why we reported that we remain on track for the forecasted numbers for the year. The 2022 is obviously going to see the start of production, and that's going to make a very significant difference to our revenue. And we'll go on to talk about the other opportunities in the next slides. Okay, next slide, please.
Yep.
So I think that's slightly a repetition of what we've done before, so I think we'll skip over that. So a little bit more about the EV OEM contract. In the period, we extended the contract for 4 years, reflecting some rephasing of the demand from the OEM. But the product is to be used in. So our products are going into a common module which is used throughout through the customer's fleet, all their vehicles, and also supply pack level interconnect. The OEM is well funded and started to roll out its innovative modular microfactories both in the UK, US, and the EU. This gives us good confidence that they've got the demands and they've got the ability to deliver against the forecast contracts within our contract. We've got a good working relationship with them and confident of progression in the new year. Okay, next slide, please. Mark's talked a bit about the new manufacturing facility. This is, as I say, based in Stonehouse. Ashvale, our main manufacturing site in Tewkesbury, and our head office, was always intended as a engineering-led product development, new product introduction facility, and that's what it's going to remain. So the scale of the UK OEM EV contracts, the fact of the guaranteed minimum volumes, as well as the need to maintain progress with a myriad of other IHT developments, meant that we needed to secure this additional manufacturing capacity. So we're implementing at this site a scaled-up version of the roll-to-roll manufacturing capability that we've developed and qualified in Tewkesbury, and as I've already said, in a setup arranged for high volume, low mix, rather than the low volume, high mix in Tewkesbury. The factory fit-out is underway. Long lead items of CapEx have been ordered and are being built really across the world in the UK, the EU, China, and Japan. As I said, we've hired a very good CEO, and he's building a strong operational team to deliver the contract. We still have a lot to do before start of production, and ongoing global COVID cases as well as supply chain constraints do remain a concern, but current planning fits with the demand profile given to us by the UK EV OEM. The initial implementation at Stonehouse is by no means its full capacity. We've laid out the factory with a specific plans for phase 2 as and when justified by demand. And I will talk a bit more about the wider market demand in the next slide. So, next slide, please. So I think we're all fully aware that automotive is going through a fundamental change. Internal combustion engines being replaced by electric power, with regulatory change driving EV adoption. So TRACKWISE's lead opportunity is the supply agreement with the UK EV OEM, but the wider opportunity is the rapidly developing UK and European EV supply chain. As indicated here, TRACKWISE is in active discussions with a number of UK and European EV OEMs and Tier 1s. I don't know whether some of you might have seen, it was recently announced that BMW have on order $28 billion worth of EV cells. It's a big number for one OEM. And the point we should all remember is that every single one of these cells will need to be connected and controlled. We think there's a very large market opportunity for this technology. TRACKWISE is well positioned, both with key technology and first mover advantage, to capitalize on this wider opportunity. So our delivery of volume production at Stonehouse, what we're calling quantity, quality, qualified, will be an important showcase for further expansion, whether at Stonehouse and/or another location. So onto the medical. Why IHT for medical catheters? So aside from the pain, the obvious reason that both patient and surgeon need the catheter to be as small as possible, long, very thin flex PCBs are replacing individual micro wires, and these are very tiny gauge wires which are extremely difficult to handle and assemble quickly and reliably. So the improvement therefore offered by improved harness technology is largely ease of manufacture. We're all very excited about this opportunity. We have 7 active accounts with catheter manufacturers from the US, EU and Israel, and a further one from the UK coming to see us next week, are in discussion with others. So these are very large opportunities regardless of customer and medical application. So our lead US OEM, who's received and built and tested our initial parts, has indicated a production volume of 1 million pieces per year for this initial product alone. So 8 of our PCBs go into a single catheter. So this is a multi-million-pound annually for a single product for a single customer. So their particular progress has been somewhat stalled recently. We understand as a result of 2 senior purchasing individuals leaving the company. We know at least one of those has been replaced, and we're hopeful of further progress, but the timeline does remain uncertain. The Catheters contract is ongoing. They paid for and we've installed and commissioned a specialist palladium gold finish line at our facility in Tewkesbury. So this is an exciting sector with significant upside potential for the business. So on to aerospace. So whilst the post-COVID landscape of mainstream aerospace remains to be determined, improved harness technology in aerospace is firmly aligned with the unarguable trend of reduced emission aviation. So its chief improvements of reduced weight and space are key weight equals fuel equals carbon reduction attributes. So current and near-term aerospace revenue will remain developmental in nature. We're receiving UK PLC support for the development and aerospace qualification of IHT, with confirmation of a £770,000 contribution towards taking IHT to TRL 6, Technology Readiness Level 6, which is a technology milestone that effectively enables the product to be sold into mainstream aviation. So we indicate here that TRACKWISE is working with a very wide and growing portfolio of world-leading aerospace innovators on the next generation products of eVTOLs, flying taxis, business jets, high-altitude pseudo satellites, as well as multiple projects for and into a large European aerospace OEM. For all of these OEMs and all their suppliers, the IHT benefits of reduced weight and reduced space are key attributes in delivering their objectives for emission-reducing aircraft. So the bottom images of a IHT sample installed in the Gulfstream demonstrator. We've recently delivered to them a very well received and paid for sample, and the discussions are ongoing as to how to take this concept through qualification into production. Okay, next slide, please. So I include the images on this slide, not only as a tangible demonstration of the progress that TRACKWISE has made in developing and delivering length unlimited, but also a reminder that while for only a very few customer needs parts of 72 meters in length, parts of any length for all IHT and customers and applications can and will be manufactured in production rolls of typically 50 meters or 100 meters or longer. So within the production roll, parts can be prepared, termination points exposed and tested prior to delivery of a roll of finished product. So roll to roll delivers not only length unlimited, but also importantly, machine intensive, cost effective manufacture. So this is really key to understanding IHT. Next slide, please. So in summary, really, in spite of 2021 continuing to be challenging times for all of us, the period has seen us continue to deliver good strategic progress. Our key agreement with the UK EV OEM demonstrates the opportunities for improved harness technology in the market. The agreement has been extended for an additional contract year. It's our opinion that Stonehouse is the right investment at the right time. We're building an experienced and capable operational team for project delivery to start to production. We remain delighted with our Stevenage Circuits acquisition. This has made and continues to make a very positive contribution to the group, and has allowed the transfer of RF circuit manufacture from Tewkesbury, thereby enabling full focus on IHT development in Ashvale. A very wide and ever-growing portfolio of IHT development opportunities and customers is being delivered, and we are confident of future progress. So we're very grateful to the support shown to us by our shareholders. Despite the challenging period, we're making good headway in delivering against our objectives. Thank you. So just a couple more slides onto the board. The company announced yesterday that Mark will be standing down as the CFO at the AGM next year. There's going to be ample opportunity before then for myself and the rest of the TRACKWISE board to say thank you for the massive contribution that Mark has made to the company. But until that time, will remain business as usual, and I'll allow Mark to add a bit of colour to his decision. This decision.
Basically, I'm 65 next March, and I would like to work a little less hard compared to how I'm working today. I'd like to have a portfolio career, but I'd also like to have a bit of spare time. I'm very happy to stay with the business for as long as necessary to make sure there's a good handover, that there's no balls get dropped. And if that means I stay longer than past the AGM, if I need to, I will. It's not an issue. There's no pressure. I just thought it was the right time. I joined the business in 2016. I've helped Philip take it through funding right at the start with R&D tax credit improvements, bit of debt, tried a bit of private equity, which didn't go anywhere, and eventually the float, and then to where we are today. And I feel that, as we get to full production next year, I've sort of done the project, and that with my age, I thought it's time to stand aside.
And Mark bought some more shares in the market yesterday.
I did.
to underpin his confidence in business. So I think that concludes the presentation, and I think we can proceed to answer some Q&A.
That's great, Philip. Mark, thank you very much indeed for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard, and we'll email you when they're ready for your review. I'd also like to remind you that your feedback is important to the company, and immediately after this presentation has ended, we will redirect you for the opportunity to provide feedback in order that the company can better understand your views and expectations. Philip, Mark, I wondered if I could just ask you to open up the Q&A tab. We've received a number of investor questions throughout today's call, and firstly, thank you to all those investors that have submitted questions. But perhaps I could hand back to you, and if I could ask you to read out the question, who it's from, and give a response where it's appropriate.
Yeah, no problem. So the first question was from Stan B, and the question is, how's the recruitment going, and how many employees will be required at the new Stonehouse building? Thank you.
So Stan, thanks for your question. I would, if you don't mind, like not to give too detailed an answer to that question, which could be of potential use to other interested parties other than our investors. So what I would say to you is that we plan to run 3 manufacturing shifts at Stonehouse, and we will be recruiting to run these 3 shifts. It is intended to be a machine-intensive manufacturing process. We are quite happy with the recruitment process going on so far. We're as you might expect, starting at the top with the plant manager, quality lead, etc., logistics lead, and working down. But the recruitment or the assessment centres are underway, and so I think for the first part of your question, we would say that it's going well, and I hope you understand if we don't answer the second part. Thank you.
The next question is from Brian B, and the question is, when Stonehouse is fully operational and fully loaded, what is the estimated revenue and EBITDA for TWD, TRACKWISE?
So that's a multi-part question, Brian. So fully operational, as we have indicated, we have laid out and are investing in effectively a phase 1 of Stonehouse. And to answer your question on that, I think you can see ThinCap's research note, and so that is laid out, and that 22 million, 4.8 EBITDA for next year. If we get the demand and invest in the further phases in Stonehouse, it will be considerably north of that. But that will require not only further demand but also further investment. Thank you.
The next question is from Tim G, and the question is: at the time of the last results, you stated that you knew of no emerging competitive technology to compete with IHT. Is this still the case, and how do you monitor this?
Tim, I'm sure I never said that, did I? Tim, I could probably talk to you for an hour on this matter. So, as I've said, particularly in conservative industries, the main competitor is no change. We are acutely aware of all PCB manufacturers who are investing in roll-to-roll flex manufacture, and particularly unlimited length flex manufacture. I think when we in our patented case, which is the multi-layer length unlimited, we do still know of anybody who can manufacture that. So it remains an evolving marketplace, but I think we feel confident in our technical position. But no emerging competitive technology is quite a strong statement.
The next question is from Quentin B, and the question is: what opportunity is presented to TRACKWISE by the use of batteries for large-scale energy storage?
Quentin, so I think IHT, our USP is long. So really we decline any, not strictly, but we decline opportunities that aren't long. And long, the typical cutoff along is 610 millimeters. So large scale storage is a good use case. Typically, a large scale storage would be made up by individual modules, which will be put together into form a battery pack, as the same way as they do in a vehicle. So I would have to say to you that it isn't something that we have explored. We aren't in any discussions with energy storage, but you're right, it's a use case. So.
The next question is from Mazin S, and the question is CapEx spend on the new facility in line with plan, or has it been impacted by materials inflation, higher freight costs, etc.?
Do you want to answer that?
Yeah, okay. So expenditure is in line with plan. We obviously hadn't planned originally to acquire the site at Stonehouse, but it presented such a good opportunity for future-proofing the business, because we've got so much space we can put in a second and possibly even a third line on that site. So we felt it was a good opportunity and one we should take. And we spent 2.8 million that we had not budgeted for. Against that, we raised 1.96 million of bank debt from HSBC by way of mortgage. So the net investment was £800,000. So that was additional. We also, in one area, we bought 2 machines instead of 1. And we did that because it became clear to us, looking at the volumes that we were going to have to produce, that we're at risk of creating a bottleneck in production. So that was a spend we hadn't planned, and that was another £900,000. And then one machine that we knew we got to buy has turned out to be considerably more expensive. So that is inflation, partly inflation and partly we've changed the design, or we've been forced to change the design. So that's about £1 million. So we've roughly spent £3 million more. Against that, last December, we said we would use asset finance at 50% to spread the cost and not use all equity, which is relatively expensive. We've been able to do that, and we've been able to do it at much better rates and much better quantities than we thought we could. So overall, we've absorbed that increase in expenditure through being able to use more asset finance. Does that answer your question?
Doesn't answer.
Yeah. So the next question is from Tim G. And the question is, can you estimate the weight saving per vehicle the UK EV OEM is obtaining through using IHT tech rather than conventional wiring solutions?
Tim, no is the short answer, and I don't think that weight saving is the motivation. So I think it's manufacturability. I mean, I think there is a weight saving, but I don't think that's the rationale for doing that. So.
And then the last question, I think, no, maybe not. Next question is from Quentin B. If volumes warranted, will TRACKWISE's production facility be able to operate multiple shifts to be able to increase volume?
So I think, as I already said, Quentin, we are planned to be manufacturing on a 3-5 system. So the automotive industry doesn't like it if you have to run the facility harder than that. So, for example, on 6 days, because it is not, it's not providing any leeway for breakdowns or any other eventuated. But so we're running it on a 3-5. I think our opportunity to increase production, as I say, is related to a phase 2. So.
The next question also from Quentin. There seem to be some questions around the ease of repair of circuits using flat cabling. Are you aware of these, and how are they being addressed?
Quentin, I am aware of that. I think it is potentially one of the disadvantages of using flat wire versus individual wire. So if you damage a bundle of wires, you can, in theory, take the individual wires out and put a new one into the bundle. So there do exist some repair techniques. As a flat planar item, actually they're much less susceptible to some forms of damage. So and also much easier to protect. So we are aware of that. And are open and upfront with it in terms of talking to prospects. So.
Next question is from Kevin W. Would it be beneficial to have a sales force progress IHT by selling the benefits more effectively and to more manufacturers?
Kevin, I think demand is not our issue at this point in time. So I think demand, our pipeline is very full at the moment.
The next question is from Mazin S. Current market forecasts assume 22 million of revenue in 2022. What gives you confidence that this expectation can be met?
So, Mazin, we have a contract with our UK EV OEM, and we have given ourselves some margin versus against the content of that contract. And when the contract is delivered both by our customer and by ourselves, there's an opportunity to go considerably north of that 22 million. So we've given ourselves some headroom, we believe.
Next question is from John E. Do you anticipate raising further funds to progress the excellent opportunities that you mentioned? Yeah. Okay, so right now we've got plenty. We're putting down plenty of capacity. We've got spare capacity to deal with the orders that we've got on hand and that we can see from the UK EV company. However, and following up on Philip's remark about demand is not being our issue, further large demand by way of orders from other companies, be they medical or EV, would necessitate further capacity and capability, and therefore at some point in the future we would need to make significant investment, and we would do that in the most cost-effective way but I suspect at some point it would involve an element of equity in it, but I don't know when that will be, and it will depend on demand actually materializing. The next question is from George L. Could you outline typical timeframes from first inquiry through to production?
George, I think that really depends from industry to industry. So I think as a typical example, so our UK EV OEM, it was about 2 years from the first phone call through to production, but whether that's typical slightly remains to be seen. So.
Next question is from Tim G. For the catheter application, does the IHT component get reused a number of times, or is it disposable item each time a catheter is inserted?
I think in general, it is a disposable item, but certainly for some applications, we have requirements have been submitted to us that needs to go through the sterilization cycle. So we are aware that a reusable one, but I think in general, it's for a one-off surgical operation. Yeah.
Next question is from Paul C. What is the level of H2 capex, and to what extent is it fully funded with existing facilities? All I can say on that, Paul, is that our forecasts show that we have sufficient funds to get through to production in the new year. Question from Mazin. Have you been approached by partners interested in licensing?
Not yet.
No. Colin C. When will you be able to name the auto EV company you are working with? Are you allowed to work with others in the same field? We don't know the answer to the first part of that question, but I'm sure you all have access to the bulletin boards.
And yes, we are. There's no exclusivity. So yes, we are allowed to, and we are working for others in the same field.
Question from William D. What product sourcing challenges are you incurring? Is it possible these will impact on revenues?
So specifically, we've had a challenge with DuPont's copper-clad laminates, which have been in demand and short supply on a worldwide basis. These have largely been resolved by good work by our procurement teams and also by working with the customer to qualify a second source. So that was specifically on that's probably been the main one, but there are, I mean, I'm sure everyone's heard about the chip shortages, and that is potentially impacting on the ability to deliver revenue, but and equally on the capital our capital program we've just been discussing, they all require chips and flat screen displays, etc. So it's possible that these will impact, but we are clearly working hard to try and mitigate any risks. So.
The next question is from Paul C. In the event that TRACKWISE successfully converts the multi-million-dollar US IHT medical opportunity, would significant additional capex be required, i.e. phase 2 Stonehouse? I think I've answered that question already. Yeah. That's all the questions that I have.
That's brilliant. Thank you very much indeed to you both. I know investor feedback is important to you guys, and we will shortly redirect investors to provide you feedback. And also, if any further questions are submitted, obviously we'll make those available to you for your review also. But before I divert investors to give you feedback, perhaps I could hand back to you just for a few closing comments, just to wrap up.
So thank you to all of you for your support of your shareholders and your interest. If you're not, it's clearly the last 18 months has been a challenging time for all of us, but we believe that we're on the verge of something very exciting. 2021 has been an investment year, and 2022, all things happening to plan, we'll see the return at the start of the return on that investment. We think we're in a very interesting place with a very interesting technology, and as I said in one of my bullets on the slides, we think Stonehouse is the right investment at the right time. If there's one message I'd like you to take away, I think it's that. So, yeah, thank you.
Thank you very much.
Philip, Mark, thank you very much indeed for updating investors this afternoon. Could I please ask investors not to close this session, as we will now automatically redirect you for the opportunity to provide feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the management team. On behalf of TRACKWISE PLC, we'd like to thank you very much for attending today's presentation. That now concludes today's session, and good afternoon to you all.